and Yellow Tunnel. My name is Carpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. And you can see the relationship between Tradespoon, Yellow Tunnel, and Avant-Garde trading on the bottom of your screen. John, Fred, were you guys able to open an account at Avant-Garde? If you did, I appreciate it. Please use that link so it gets credited to Yellow Tunnel. Since we do have a relationship with that, just click on here, sign up now. I'll put that here, screen. All right, anyway, let's talk about first current market conditions. Let's see, DEER is rebounding nicely. So if you hold in DEER off a 50-day, 100-day moving average, so I think Triple M had strong earnings. So Triple M is doing well. General Motors had a decent earnings and they're doing well. GEV today kind of got a strike. So down 8%. Another AI darling. So you have kind of a mixed bag reaction, right? Down 8%, but Supermicro Computer, actually up 20%. So Taiwan Semiconductor, ASML. So we'll see. Very important. We're heading into very important earnings. 10-year yield, right? Earnings are great, but if 10-year continues to go higher and basically at the height of the conflict, 2-year yield is actually making new highs, right? This is not bullish by any stretch of imagination. So it is concerning, right? High interest for longer, meaning higher Fed might start, tightening financial conditions, doing rate hikes, maybe even, decrease their balance sheet. I mean, that's probably not going to happen anytime soon, but nonetheless, that's the perception. That is would be a bearish argument, right? That earnings from Google might not matter if 2-year yield continue to break out. On the other hand, value stocks are close to all-time high, basically retested all-time high again today. So value stocks are outperforming. Small caps, not that far from all-time high, sitting at the 20-day moving average. And QQQs, it recovered from pullback in the morning. So day 1, day 2, day 3, it's standing above 700. Obviously, 686 is a very vulnerable level, right? Using the Love Island terminology that my kids use. They're vulnerable, and QQ is vulnerable. They can get kicked out of the island if bulls are unable to hold on to 686 level, right? And that opens the door to 100-day moving average 670 or 200-day moving average 640. Descending triangle, right? Descending triangle also pretty bearish price pattern, which usually results to the downside, right? More often than not. So that is something to keep an eye on. In terms of positions, let's review them quickly. This is the time to rebalance your portfolio, right? We just had a live strategy roundtable on Yellow Tunnel. I would rebalance my portfolio. Okay, perfect, Fred. I appreciate that. Thank you. When you do, just please use that link that I left. what was I about to say? So I would rebalance portfolio because in the next 2 weeks, hyperscaler is going to announce earnings, and we'll see. I think 70% of the time, this descending triangle results to the downside, right? 40% to the upside. But again, we haven't had the down move yet on above average volume. So, but if we do have down move, then 70% of the time it continues to go lower. So I would keep an eye on that setup. Okay, so let's look at the positions. So again, I was in a strategy roundtable, basically. Sorry, I keep going, but QQQ was down, I think 8%, right from the high. So almost 10%, 8.5% from the peak of the market in the beginning of June to this week and last week, down 8%. Right? If your portfolio was down 20%, I would use this rebound as a means to raising cash, right? I would raise cash. I'm bullish. I think market is going to hit 750 in the next couple of weeks, but maybe that's the core scenario. But I do realize, based on geopolitical risk and where the interest rates are going, right? The risk is that 2-year is going to break out. It's already breaking out, and then you're going to have sharp reversal, especially kind of buy the rumor, sell the news, right? Sell the earnings news. So totally possible. So I would, if I was down 20%, I would trim my high beta stocks, because that's the most common mistakes all the subscribers, not all, but majority of the subscribers make, right? They are participating in the stocks that are well advertised in the social media or main media channels, and they have high concentration into AI related stocks, or they have high concentration in meme stocks, or high concentration in SPAC stocks, high concentration in Bitcoins, assets. So you want to be leveraged. You want to have that barbell approach where, okay, 10% you can buy Bitcoin, you can buy, Forex, fine. 10-15% of your portfolio you can use for AI, Bitcoin, and something that you expect to quadruple in the next couple months. But majority of your portfolio, you want to make sure that you're diversified and it doesn't have high beta, high momentum that's vulnerable for 30-40% pullbacks, right? So that would be my mindset. Obviously, if you're early in your career and you're making a lot of money and this is your discretion, okay, you can be more aggressive. That's fine too. All right. So if you rebalance, then I'm going to rebalance too. I do have Amazon put spread. That's one bearish position that I have. I do have Amazon stock. They will probably relate to the, move with the Google news, but the good news is that I do have a hedge. It looks like people are concerned about the earnings. At least today, Amazon did drop 1%. Microsoft dropped, and I think software in general is under pressure, dropped below 90 again. So software names are again, as earnings unfold, are under pressure. And actually, I'm not sure if there's any software name. Did anyone announce earnings from software? Not that I can recall. So this could be a reaction to the 2-year yield breaking out. Let's see. So we had Philip Morris today. up 3%. Philip Morris is printing money. GV got a strike, down 8%. That's not good. AT&T is doing well. AT&T up 2%. TL, I think that's another semiconductor. So TE, maybe that's related. TEL semiconductors are down 8%. Right, so pretty bearish reaction to TEL. Let's see anybody else. How's Otis doing? Industrials? Dismal. Pulte Group, home builders. Not going anywhere. Stifle Financial. That's not going to move market. Yeah, that's about it. Okay. So Amazon, I'm going to hold. I have stock. I have put spread, so that I'm hedged. Citigroup looks like it's catching a bit finally. We did have a rally yesterday into the close. We're staying above this 130 level, 132 level, which is positive, but again, below 50-day moving average. So not a green light. We need to get above this 50-day moving average. We do need some kind of a reprieve from Middle East situation, because if 2-year continues to break out, I think banks will roll over eventually. So it's a spread, so I'm limited on my losses, but on the other hand, it's August position, and clock is ticking. So for now, still holding Citigroup 141, 135, 140 spread, and still out of the money. So that's Citigroup. Industrials, I think, are catching a bit today. CRR is up almost 2%. Deere is bouncing back. Triple M had decent earnings. So Boeing, I think, is finally catching a bit. So we'll see. We'll see if this is just a rebound from oversold conditions, or we can actually grind back to the 70 level. DRAM, I have both September and August position. I closed July. That did not work out. It's off the session low. It did bounce yesterday. Obviously, 50-day moving average and 20-day moving average is your overhead resistance. We need to get above that, at least 60. I mean, ideally above 65 level to say, all aboard. But on the other hand, maybe the bottom is in place, right? Maybe the bottom is in place. And I think semiconductors could be said the same thing, right? Semis have to get above 600 level. So if semiconductors can get above 600 level and stay there for a couple of days, I think we have a good chance of retesting all-time highs. Najee Thomas, welcome back. So that's DRAM. IWM. That's kind of one of my core positions. I mean, yield is up. Situation in the Middle East obviously is not helping small cap stocks. They kind of, as the rest of the market is going sideways. That would be the biggest risk. But I have cash if it breaks down. So for now, IWM, QQQ, I'm holding. I sell when they overbought and I buy when they oversold. That's kind of the strategy. Medtronic and Microsoft. Medtronic, I'm trying to close. Right, it's actually down 83 basis points, and Microsoft is down. Right, was the interest rate higher? Again, 400 level has been an overhead resistance, has been support, and got rejected into the Google earnings. Still have QQQ stock, buying on pullbacks, and TFC, regional bank. I mean, similar to same thought process on small caps, regional banks are in the same bucket. So August position does need to bounce back. It's gliding on this support level, still above 50, 100, 200. We have this gold cross, so we'll see. I'm bullish on regional banks. Any questions? Naji, how are you? Yeah, so Naji, I mean the put spread, semiconductors put spread doing well. Potentially can trim semiconductor put spread, but we're still not out of the woods. I think SMH has to get above 600 level. And on one hand, we have TEL earnings, right? That down 8% and very bearish. Super microcomputer, MCSI. SMCI is up 20%. Again, mixed bag. We'll see. These are smaller players. Taiwan Semiconductor, it's the same as SMH, ASML, doing a little bit better, above 20, above 50. So ASML looks decent. KLAC, similar, right? Approaching earnings. AMAT, similar, right at the 50-day moving average. So we'll see if the uptrend can resume. All right, let's dig into Google. All right, so it looks like John is bearish. He's buying a put spread. Is it bearish put spread or bullish put spread, John? I wasn't sure. It just says I have a put spread. I'm down to 330. So is it like you're selling out of the money put spread or you're buying out of the money put spread? I mean, Google was one of the better hyperscalers. They did delay the release of their latest AI model, right, the Gemini. But I think adoption is going well. I know a lot of people are switching to Google Cloud, at least in the space that I work with. SPX 7500 is your put wall. 7500 is your SPX gamma flip. We're above 7500, so that's a good sign. That is a good sign that if we can stay above 7,500, next level will be 7,600. So after Google earnings, we're either going to retest 7,600 or we're going to test 7,400. Google, interesting. How do people position? Let's see. Is put call ratio still extra bullish or not? Okay, so about 2 to 1, on the this week expiration and 2 to 1 here and almost 2 to 1 August expiration. So I would say bullish bias, just like I have bullish bias. Moved 10% higher last time. It moved 2% lower, higher, 2% lower. So I'm inclined to sell put spread. I don't know if I want to buy call spread or sell call spread. I guess that will. Let's do the put spread, the easy part. Put spread, I'm more comfortable. So put spread, one standard deviation. Let's see. So 724 weekly and 731 weekly. And monthly and monthly. So you do have a lot of position at 322 level, 322. So the put spread this is the wrong. Gonna go on the weekly expiration. 22, 23, 24, not today. So 24, much high open interest. So 222.5. See, we can do it further. $6,000 contracts. Sell, buy. Let's see. It's about 33 cents. So 320, 317.5. That would take you to 200-day moving average. What did John say? 330. Okay, so here's 330. Okay, so you do have high open interest at 320, and very high volume. Open interest, high volume. That's the level that people are targeting, 200-day moving average. So let's do that. For trade option, Google, vertical, July 24th. All strike. Let's see. What did I say? 322, 320. Into 320. Trading at 41. Sell to open. Let's see, 42 cents. Let's see, can I get 42 cents? $0.41. That's me placing bids. Okay, 40 cents. Okay, 40 cents. Okay, so 40 cents. I was able to get a fill for 40 cents. So that's my bid and offer. So that worked. All right. Let me do the same thing. Trade. My personal account, I'll do the same. And Google. Vertical put spread. Okay. So that would be the call side, 322, 320. On the upside, I mean, it's all over the place. I mean, you obviously have 410. I don't know why. It's an unusual strike, but 410, very high open interest at 410. And here you have 370. 370. So you have to sell 370 by 372.5 to get 35 cents. 370. I'll do the call spread. I'll do the call spread instead, but I would go into the next week. So not 24, but 29, or 24 plus 7, 31. Buy 370, sell 375, 92 cents. So buying 370, selling 375 call spread. Let's do that. Vertical, and I'm gonna go not this Friday expiration, but July, end of the month. And what did I do? $5 per. I could do $2.50 spread. Do $2.50 spread. Oh, not 24, but 31st. Let's see. 370, 372.5. Trades about. Actually, make it winning. 372.5, 375. I can probably get for 40 cents. By to open one, the limit of 50 cents. Go to 40 cents. Huh? So 370, 372.5. So I decided to do 372.5. 47 cents. 45. No. 50. Okay, 50, I got filled. So, okay, so that's my bid, 50 cents. So I bought 370, sold 372.5. if you have any questions. Okay, so that's Google. Any questions on Google? So on Google, let's just review it. I did bullish put spread. So I sold, right? I received the credit for selling 200-day moving average, right? Around 320, 322. So I sold 322.5, 320 put spread that expires this Friday for 40 cents. And then I used that premium to buy a debit call spread, 370, 372.5. So in ideal world, Google repeats the same earnings as it did, last April, right? If it goes up 10%, right? If Google goes up 10% and gets to 370 level, then, I basically put out a spread for 10 cents, but potentially can close it for 250, right? That would be ideal situation, that the earnings, they are, that they're cloud computing and Gemini and AI and pay-per-click models, and then they're building their own semiconductors for the AI. So, and then they're just gonna hit a home run. So that's how I'm positioned. I sold the put spread and buying the call spread. Worst case scenario, I'm wrong. It drops below 320. Well, then I lost 50 cents here, and then I lost another $2 here. So I can make $2.50, and I can lose $2.50. That's kind of the maximum. Long calls prior through earnings. I don't prefer long calls. It would be just more expensive, right? I mean, obviously, if you think it's going to move beyond 10%, doesn't make sense then to sell at 372.5. You just buy 370, but then you're risking $3.80, which is almost 1% of the underlying stock. If you have a large portfolio and you're convinced that it's going to move 10%, right? 344 plus 10% is what? 35. That would be 380, right? And this would be a $10 stock. You can triple it, right? You can make $6 or you can lose $3. Obviously, if it moves 20%, then even more. But these are high outliers, right? And highly unlikely events. So I'm more conservative, so I bought a put spread, call spread. Let me know, Naji, if it makes sense. CVS. Model did pick up CVS. I think it makes sense to diversify. I have Medtronic. CVS continues to make new highs. I mean, there is earnings, obviously, August 5th, but healthcare rebounding and CVS looks strong. I'm bullish on CVS. Buying into pullbacks makes sense. Question: the credit call spreads for Google, the difference in strikes 2.5. When you put the GTC closeout orders, how far off the strike difference do you go? Experience, we won't get the full spread amount if it's skyrockets, but rather a little less. I mean, ideally, on the $2.5 spread, let's say tomorrow Google opens up at 370, right, or 371. Ideally, I can, I don't want to wait till expiration because Google, like last earnings, it couldn't go up. I mean, it did go up and it continued to go up, but it could go up and then revert back. So usually 50%, right? If I can collect 40 cents here and let's say close this for $1 or $1.50, right? Maybe half the maximum profit, $1.50. No, that would be great, right? I can collect 40 cents here, collect $1 here, relatively, small risk, right? And you have these outsized returns. So I wouldn't wait for expiration. Usually I don't, unless Google's opens up at 380, then maybe can be more patient. But if it opens at 360 or 370, if I can make $1 on this trade, that'll be great. Najee, let me know if it makes sense. Fred did this trade 2-by-1, sold 2 put spread, bought 1 call spread. Yeah, you can sell 2 put spread, buy 1 call spread. That makes sense. So if you prep for a 10% increase and the debit was, say, 40 cents, would you price for a credit of 44 cents? So debit was 40 cents, would you price for credit for 44? I mean, for debit spread 40 for 44. I mean, you're talking about after earnings? I mean, 40 cents is, the price that I paid right now. This is the credit for 40 cents. Debit was 50 cents. Najee, I'm not sure I understand the question. Half of the 2.5 spread. Okay. So 1.5, 150 credit. Yes. So $1.25, $1.50 credit. I would watch pre-market tomorrow and see where pre-market session ends, right? And then you can make a decision. Because if it's right on the border, yes, $1.25, $1.50. John, thank you. Najee, thank you, because you gave an example. Okay, understand. Makes sense. Okay, makes sense. Understand. Okay, we caught up with Google. Let me send email. Did you get a text message? Okay, at least I got a text message. Okay, that's already a good sign. Let me just send email to our earnings power trader team. And then we can move on. EPT, trader Google, open. I'm gonna say trader open Google spread trade. Google spread. Google spread trade, open Google spread trade. Save. And back to content. Okay. So if you have a larger portfolio and more experience and you want more earnings, then, well, the next candidate would be Tesla. Same setup, right? Same kind of idea. It's all about AI, robotics. I mean, they derive main revenue from the obviously car sales. I love Tesla. The autopilot is great. I can understand why people drive anything but Tesla, but that's just me, right? Not everybody thinks like that. Past earnings, average move 4%, estimation 5% move. People are not super excited about Tesla. We do have high open interest, strike 350 on Tesla. Okay, I'm inclined to take that trade. Let's see how much credit can I get. So Tesla, if I target 350 strike, vertical put spread, 350, and buy 347.5, 40 cents. So same idea. I can try to get 40 cents for 350, 347, basically revisiting April lows. So that's Tesla. On the upside, I'm not sure if I'm very bullish on Tesla. I mean, I am bullish, but that doesn't mean most people are bullish. So you do have high open interest at 420. And then 400. I mean, 400 is a nice round number. 410. So let's see, trade option, Tesla, vertical call spread, July 24. Let's see, 410. How much is 4? If I sell 410, 412 and a half. 23 cents. That's not enough. So I do have to go to 400, 402 and a half. 25, right? So 40 cents. Okay, so 400, you do have a high concentration of open interest at 400 level. So they do need to deliver strong earnings to break through the 400 level, right? So sell 400 for it. So maybe follow Fred's advice 2 to 1. $400, 402 and a half. But for both credits, in this case, I'm doing iron counter. I'm selling call spreads and put spreads because, you know, I think Elon Musk is, you know, too involved with the robotics and SpaceX and Mars, and I don't know if he's paying attention to margins, Tesla margins. So iron counter on both sides. So Tesla iron counter next week, 350, 347, 400, 402, and then Google bought a call spread and sold the put spread. Okay. Let's see, 250, maybe room for one more. We did Google, Tesla, Texas Instruments. Texas Instruments hit a home run last time. Had a very strong earnings reaction. It's still trading above this earnings sprint. So Texas Instrument has been solid. More of an industrial semiconductor. Implied move about 10% to 65. Not the most liquid name in the world in terms of puts, but let's see, trade option, Texas Instruments, vertical put spread 10% would take you to 270, right? What was that high open interest? Yeah. 280, 270. Okay, 270. Let's see, Texas Instrument. Ooh, a lot of premium. Go to 260 probably. But not a lot. Yeah, not huge volume and open interest. That's the only problem. 255, 252 and a half, 47 cents. So 255, 252 and a half. Really wide bid and ask. So that would be the only concern. Not a lot of open interest or volume. So ideally. Yeah. So can't get it filled and not enough volume. Okay, so let's see if there's something more liquid. Okay, so Google, Tesla, Texas Instrument, IBM, but they already pre-announced. ServiceNow. How liquid is ServiceNow? Not a software name, down already 6%. So it does have a lot of position. Let's see, ServiceNow. Going into the earnings, it's pulling back significantly. It is after the close, right? ServiceNow. July 22nd, after market close. So 85 strike, 85 strike. Yeah, so 85, 80 strike. Let's see. That would be, yeah, it would be the new low, basically. So trade option, ServiceNow, vertical put spread. Okay, so let's see, 80 put. How much is 80 put? 80 put is 51 cents. And 79 put. You get for 11 cents. 81, 80, 13 cents. 82, so 81, 14 cents. Okay. So you can sell 81, 82 or 80, 81, get 12 to 13 cents. And now the call spreads. Let's see how much time is it? 2:55, 5 minutes. Okay, so we know there's a lot of position 85 strike and 80 strike. So somewhere between 80 and 85. And here you have 110. So let's see now, vertical call. What's the last price? 102? 95.50. 95.50. Let's see, 110. No, 20. I can target 120. Let's see, 120. So sell to open 120. So same things. 120, 21 and a half. I'm sorry, 121. 120, 121 trades at 6 cents. Okay, so I gotta come close. 118, 119, 7 cents. 117, 180, also 7 cents. I'll trade in 116, 170, 8 cents. Okay, how about 120 and 122? Yeah. All trading kind of in the same range. You have a high open interest, but you can see bid and ask are almost the same. Doesn't matter what you're selling. Only 5 cents. Not the most optimal. But I guess I can just buy a call with the assumption that ServiceNow is not going to be down 20% or 10%. They've been struggling. So it could be up 20% as well. 115. 115. 116. Yeah, I almost have to go to 110, 111, 112, 110, to get 14 cents. 15%. I guess it's fine. 110, 115, 110, 111, 15 times. Place. Okay, so iron condor on ServiceNow as well. Okay, so sold credit put spread on ServiceNow. Sold Texas Instruments, I did not. Tesla. Sold credit put spreads on Tesla. And then I sold Lizard on Google. All right. Fred, John, Lalit, Simon, Tom, Naji. Any questions? Simon, welcome back. 3 minutes, you'll go see all your dog out. God bless. Thank you, John. Makes sense. Okay, guys. All eyes on Google earnings. Tesla, ServiceNow. Looks like people are already selling their positions. We'll see if they're right. EQT, wow. Should have bought EQT yesterday on the earnings. That looks good. Okay. Energy name EQT. That makes sense to buy. They are skyrocketing. How's XOP? So still continue to grind higher. All right, guys, that's all I have for today. Thank you very much and have a great day. Thank you for joining.